So maybe just to drill down more on this one, yeah?
Yes.
We've said we've gotten a return of 29.32%.
Yes.
What does that actually mean? If I had invested 1 million shillings, is it annualized, like for the whole year, if I had invested the whole year, or is it for the period I have invested?
Okay. What we have shown here is the absolute return. Okay. The absolute return, because the first investor of Oak Special Fund came in on 20th of February this year. That's why we are looking at 20th as the inception date and going forward. Up to the end of last month, which is 30th of November, if one had exactly 1 million shillings, we are not allowed to disclose how much each client has, and that's why we have put a simulation so that one can tally. Okay. So for 1 million shillings, the client would have had now an income, we call it an income of 293,207.15. That is after all fees have been deducted. Yeah. So it's after any deductions, and that's what they'll take home. So if they withdrew at that moment, they'll just go with 1.293 million home.
So I like what you said, it's a simulation. So if somebody came in August, for example,
yes,
and it's now December the 13th,
yes,
their return may not necessarily be 200 and, prorated for that period.
Yes.
It could be more or it could be slightly less, depending on the return we've made in that period. Is that what you're saying? Yes.
Actually, I like that question because the nature of our fund, it varies. The incomes that are recognized, and that's why we say incomes, we don't say interest, because income comes from various spots, from interest-bearing instruments, from trading, from capital gains, and maybe some assets being just revalued mark to market. That may vary based on that period. And that's why when you go later to our fact sheet, you'll see month on month that there are varying rates of return on each month.
Okay.
Yes.
So I hear somebody asking, Ian, yes, how can I actually verify that return that you say you've made it? Okay. Yeah, how can I verify it?
Okay. The best way is come invest, get your statement, and please withdraw your income. Yeah. That way you are able to basically have the money and not just have figures on a piece of paper.
That's true. Somebody actually asked me that question, and yes, the answer I also gave them was, in addition to that, is the fact that we don't cook these returns.
Yes.
In fact, we work with a custodian, which is a bank that holds your money. So when you invest the money and put the money in a bank account called Oak Special Fund account for this particular purpose. And then when we are directing or asking the bank to then invest in different products, we tell the bank, now you send money here, you send money there, invest in this or invest in the other. And so the returns are not manufactured on an Excel sheet in our office, are they?
They are not at all.
Okay.
Not at all. I can assure you of that.
So what are some of the assets then that we have invested in so far?
Okay. I'll go directly to actually part of the fact sheet that we have, okay, so that we can break it down.
Okay.
We'll go to the asset classes are categorized into global and the local. I'll start with the local, which is the easiest one. When you write local government securities, what we actually mean are government bonds that are offered by the government, and also the treasury bills that are offered on a weekly basis. So on the treasury bills, we have the 91-day, 182-day, and 364 days that are offered by the central bank. And for the government bonds, you'll always see them being issued on the central bank website, the primary. However, we can still trade on what is called the secondary market on that. That is on government securities. We have another section that says cash and cash equivalents. I know sounds like jargon in the finance world, but what we mean is what you have in easily accessible, I'm avoiding the financial jargon, easily accessible money to deploy anywhere. So on cash and cash equivalents, we can place money on call with a bank. We can also place it on a fixed deposit. So the fixed deposit can be maybe for a month, 3 months, 6 months, and even as long as 1 year, we can place fixed deposit depending on how we see our money being placed.
Yeah. So just maybe I can make a comment on call.
Yes.
Sometimes I like, Ati call. I've never heard of an account called call in a bank. So just to clarify, a call deposit is an arrangement you get into with your bank to not have it in a current account, but have it in a call account. And so every bank offers this. A lot of people don't know. You might be a business person, you have cash available, you keep it in a current account, but you can actually talk to your bank and get your money moved to a call account. And in a call account, it earns interest, even for the business. And so what happens is that you're able to earn interest on that money. And the reason it's called a call account is that you can call your bank at any point in time to withdraw. And within the day, you have the money. So just to clarify, because we are not putting 10 million shillings on call, it's a much bigger account, we're able to negotiate much, much higher rates. And so that's how we're able to give the sort of returns we're able to give.
True.
Yeah.
Yes.
So you're talking now. Sorry, I just wanted to explain that. So now that's cash and cash equivalents.
Yes. Then we look at NSE derivatives and equities. First, I'll mention on the equities.
What's NSE?
NSE is the Nairobi Securities Exchange. That is the body that actually regulates how we trade what are called stocks, what are known as stocks. So the buying and selling of stocks. We are able to use our expertise, even in FAIDA, to analyze and actually buy and even sell once you have capital appreciation. And sometimes you might even buy a stock or an equity, and then it's actually moving in the opposite direction. You're able to cut your losses and get out of the position. Still in NSE, we have what they've introduced as NSE derivatives. These are instruments that have been introduced so that we can do what is called short selling of instruments. Let me give an example. Assuming there is a stock X, I'll call it X, that is actually declining in value. Based on the normal structure of the Nairobi Securities Exchange, you actually buy a stock, wait for it to go up, then you can sell. But if it's going down, if you had it, you'll sell it and wait for it down. But if you are not in it, there is nothing much you can do except watch it.
Yeah.
And derivatives have come there to help people be able to sell as it's going down and maybe buy it later. I know today we are supposed to demystify this, so I won't delve into the nitty-gritties of derivatives so that we keep people at ease today. Yes.
Let's go to commercial paper.
Commercial paper, this is something that is offered by Rina's department. So if I explained commercial paper, I'll actually be in someone's department, and I would love if you could explain.
No problem.
Yes.
So I head the corporate finance department at FAIDA. And what we do is help companies raise capital. And that just means if a company wants to expand or they have a big job that they've been given to supply something, and the company that's given them the opportunity says, we will pay you in 9 months, or we'll pay you in 6 months. And they're like, we can't wait 6 months. We don't have the cash available. They can come to us or institutions such as us, and we arrange instruments that can help them raise the money. So an example of that instrument is a commercial paper. So it's similar to a treasury bill that's issued by the government, except that commercial papers are issued by companies. So let me give you an example. Let's say Java does, 2,000 meals a day. I'm just giving you an example. And then they get a contract for a big event that's coming to East Africa, and it's being done in Kenya, and they have to offer 10,000 meals a day. And they're like, we can't manage that. And so with the current cash flows. And so they might need some money to be able to offer those meals. So they can come to us, we structure a commercial paper, let's say for 9 months or for 12 months, and they borrow money from the public with a promise to pay back that money at the end of the 9 months. So that's what it is. It's borrowing money for short periods of time that is done by companies. Instead of going to the bank, they can come to investment banks and we can structure those commercial papers for them. So these are some of the instruments we invest in as Oak Special Fund.
Thank you, Rina, for that and assistance. Yeah.
So we go to currency trading, the one
Yes.
I don't like, but it is okay. Currency trading.
I'll break it down to two sections.